doop, doop, doop. Alright guys, happy New Year's Eve, last day of the year 2023. What a year for the stock market, right? If you haven't been, wait, I think I click on the wrong thing here. Un momento, por favor. Okay, hold on. I want trading view, actually. S&P 500. What was I looking at as well? I was looking at, bond yield. That's the one. I want kind of, this is investor place, bond and rate, CNBC, see how they portray things. We'll see how that goes. I hate it when they do that. I'm not gonna click on their website. Understanding bond yield. This is from FINRA. Yield curve and all that stuff. CD price and yields. Corporate bonds are high. Sorry guys, I'm trying to set it up. I should have set it up earlier. I thought I had a better one already, but I think it's this one. Yeah, this one is a better one. So this is from Bloomberg Bond Yield. Alright. So I need to set up the chat, huh? Okay, give me a minute here. So let's look at that real quick. Right here. Hope everybody's doing well. Okay, I think I'm on here, but let me make this pop out and then kind of do that. Okay, I think it's out, and then if I do this, I want pop out. Not that one, it's this one right here. Yay. Okay, hopefully everybody sees that. Okay, good. I guess I could blend it, I think. Hold on, let's see, somebody did that. Blend mode. Screen. Oh, nope. That's a bad one. Multiple. Oh, okay. You see a little transition over there. Maybe lighten. Try that. Nope. It's not a good one either. I think the combo one is good. Multiple. Oh, subtract. What's that? Oh, okay. Not quite sure if I like that. Let's do multiple. Yeah. I think that's better. At least you could get to see, what's happening over here. Not as much though, but we'll try that one. Okay, so welcome to the show. Just gonna be, I don't know, I mean, not quite sure what the direction of the show is. To be honest. Just take some time here to kind of try to understand the bond yield. What does it mean for the economy? What does it mean when you have a short-term yield that is paying more than the actual long-term yields, right? I mean, look at the 10-year treasury bond. It only pays you 3 3%, right? 3.8%. While a 3-month government bond actually pay you more. So this is when you hear yield curve inversion, this is what it means. It means that, people are going to be more likely to buy the 3 months or 6 months, right, than buying the long term, right? But if you were to look at the 10-year, it used to be 4%, right? And the 30 years is a little bit more. But the drop was kind of like significant, right? And when that happened, it means that these big institutions, they're chasing that yield, right? And the 2 years too, if they were to become inverted back or reverted back to lower than the 10-year yield, that usually means that it's something is going to hit the fan, right? So currently it was still high, right? 2 years and all that stuff. And people are chasing the 10 years right now, or even the 20-year, the long-term ones, right? In order to capture as much, interest as possible, right? So of course 5% is better than 3%, but this can invert back pretty quickly. People are gonna chase it, and I'm gonna get pay right now at 5. But the more people buying into this, the lower the yield is going to be, because how many trillions of dollars can the U.S. government pay out? They can't. So eventually they're gonna have to offer lower yield in order to bring back the economy, or at least lower the treasury market, so to speak, right? Okay, so I hope that makes sense. At least that's how I view it anyway. This year has been pretty good run. There's a good run to it. I hope I'm on here. Wonder why. That's so weird. Okay, but anyway, so okay, I don't know what I'm looking at here. Okay, so this is yes, so this is S&P 500, right? And from November to here to today's trading, so Monday market close, so it's been 20% run right there, right? From, whatever it's called, like Santa Claus rally or whatever it may be. I don't know, there might be some more room to run, but if you look at take note at the RSI right here, it's kind of overextended, right? So when that happened, there's a possibility that it's going to drop, right? If you look at the peak right here, yes, there might be a little tiny push up when it draw back a little bit, but usually that's what happened when it's called diversion or whatever. And this is the daily candle, by the way. So drop a little bit, push up, and then drop back, kind of like that, kind of like what happens here, right? And the RSI, you have to look into what is the diversion point. So that's the point, high, right? And then when you want to measure this one, higher, but the RSI is lower. See? So that's usually mean the opposite will happen in immediate turn. So if you look at this one, see, it's down. RSI. So that's what it means when people say diversion, right? And again, it's not happens all the time, or most of the time. You have to kind of like find this, and people don't have the patience to do that. Most people don't. So there you go. And then, so this is just I hesitate to say a prediction here. Not at all. So that's that. And as far as like if you talk about GameStop here, if you look at the GameStop chart, obviously we know what this company is fundamentally. But if you think about, like, this is a daily candle. So it seems like we've been beating expectation for 4 quarters in a row, but yet, the price is crater, right? From the last quarter to here, yes, it's higher in price, but from here, from this high to this low, we were beating expectation all that time. So that's a good thing. And then we beat expectation here too. We're expected to beat expectation the next year as well, because again, it's on inflationary number here. So the items that we were able to sell, we were going to be able to jack up the price due to inflation, obviously. Of course, we do have some challenges in it ahead, but I think leadership has been cutting costs, has been doing the right thing at this moment to set up for success for the next couple years, right? And of course, the next couple years, again, it's a growth mode and all that stuff in the environment that people don't really want to grow, right? Because we did the right thing when people are not looking at that, 2 years ago, right? 3 years ago, we were aggressively cutting down store, and people were criticizing, GameStop for cutting down store numbers and saying that cutting costs is not enough and all that stuff, right? Now all the big guys are cutting costs, right? Because they don't know how to predict the future of the economy, right? I'm sure Ryan Cohen has a very good pulse, or a very good idea of what the bond is like, right? And he's a pretty good investor, in my opinion, right? Knowing where to buy, what to buy, knowing that he bought Apple, and was able to 3x his money. That's like, how smart do you have to be, right? And I'm sure he has so many smart people around him too, to be able to know what's going on with the bond market and all that stuff. And the fact that he put money away in the bond market as well, that is a testament of his knowledge about the bond market, so to speak. I think, because he is an investor in Apple has been notorious in, investing in treasury bond in order to, make their income for them. I think there was a number that was putting out that Apple actually make $1 billion every quarter, every 3 months. $1 billion just park their money in the treasury bond. That's it. So this type of thing, is beneficial when the economy is going bad, right? And today's economy, like, everybody is struggling, retail including. And yes, this is the challenge ahead of time, but leadership has been preparing for this for 3 years already. So, and of course the news media, they don't really react to forward-leaning statement or anything like that for GameStop, but they're forward leading to other company that they want you to buy into, right? And so, those type of analysis happens because they think that you are unable to make an analysis for your own self, right? They think that they're smarter than you. They think that they, could manipulate you into buying, selling things on the right time, and the right time for them, wrong time for you, right? that's the only way that they could make money, in my opinion. Obviously, based on what I see, especially how the news media has been covering GameStop in particular, and I think recently as well, how the movement itself has been hijacked by these people already, saying that, oh, AMC is better, oh, AMC is cheaper, oh, AMC is set up to be the GME 2.0 type thing, and it's not. You have to look into it yourself to see that those type of narrative was pushed out to you. Why would CNBC have Adam Aaron on as an interview saying, oh, you're saved by the apes and all that stuff? And of course they're psychologically trying to make you think that the movement was a really good one or whatever, right? But then steering you to the wrong company, right? Why is it the wrong company? Well, there's no catalyst coming. And even if there is a catalyst, Adam Aarons won't let it, right? And I've said it so many times that even if Adam Aarons wants to help the company, make the company better, he can't, because he's beholden to his debt collector. Okay? Who's the debt collector? People who hold the bond, who hold the debt. Yeah. And to say that doesn't really matter, that's not true. It does matter. So this is a case of inside trading. This gentleman obviously, was selling off a whole bunch of stocks, and even though he was the senator committee of the environment, right, on environment, so he knows that this is the stock to be in at the time, and then sold it out for profit. Again, this type of thing happens all the time. Of course, we have Nancy Pelosi. It's not, just the Republican here. So it's bipartisan. People are just there to look out for themselves. They're not there to protect the public, like they say. And they always say, "Oh, we are the public servant. I work for you." BS. No, you work for the corporation that owns you. Right? That's why every single policy that you support, whether you from which side, which color you support, you're still supporting the same thing, with a different kind of twist on, a certain group of people might have a little bit of leeway versus another group of people. But all in all, you're actually, not really doing anything much anyway. So. Hi Jay, what's up? Happy New Year. Thank you for joining. I'm just babbling at this moment. And hold on, I think the chat is not doing well. Let's do a normal one. I think it's better. Yes. Okay, so let's get to the meat and potato of this one. I was scrolling on the Twitter. I keep saying Twitter, but it should be X, right? But look, the URL is still Twitter, so I'm thinking, oh, why can't I just say Twitter too? So let's just do Twitter or X or whatever. It really doesn't matter. So this platform right here, of course, we have a I don't know, there's some good things happening here. So I was thinking, let me just do some investigation here, right? And this video, actually, the one that caught my attention here. And it's due to the price, inflation, the pricing of things, why foods are so expensive, and restaurant is the first to take a hit, right? And to me, it speaks to the economy here. And of course, with food, it's kind of like retail, right? GameStop is selling electronic goods and used games and all that stuff. At least it doesn't spoil, so to speak. But technology do change every year, it seems, right? Very fast. So even though the food doesn't, spoil that quickly, electronic goods do go out of date pretty much every year, right? But again, you could still sell it for cheap, right? My point in that is that I could see some challenges that is similar to running a restaurant, so to speak, right? So let's listen to this one, gentlemen. It's only 1 minute, so I hope I don't get flagged. Hold on one second.
You want to know why your sandwich costs so much at the local restaurant? My friend Dan sent me a text the other day. He was at one of my restaurants. He said, Brian, I just ordered a BLT at $16. You realize it's just bread, bacon, lettuce, and tomato. I said, yeah, Dan, but let me give you some restaurant perspective. In today's economy, my rent is $20,000 a month. My utilities are $6,000 a month. And my labor is currently running about $60,000 a month. That's at 28%. So I'm in for $86,000 a month before I sell a single sandwich. At a 32% food cost, I have about $11 profit in that sandwich. That means I have to sell 93,800 sandwiches a year, or 257 a day, just to break even and make no money. 1.5 million in revenue, and I don't make a dime. That's why your sandwich costs so much. That's a reflection on our economy.
So that is insanity, right? With that type of perspective, because again, like if you're running a restaurant and all that stuff, you might not know what these restaurant owners are going through, right? Because of the rent issue. Now, this is why it's so valuable to at least not have those stores around. And this is why, GameStop has been preparing for this for how long now, right? We've been cutting down stores because those stores cost money. How much did this guy pay? $20,000 a month just for keeping the store open? Why would we want to do that? And Brian Susie, this, you can't cut store and make profit. Like, yes, we can. Like, if you could just cut, that makes sense, right? If you could cut the cost of running the store, and if the store that you are, keeping open doesn't make you money, it makes all the sense in the world to cut down the number of store, but still trying to deliver a good in different ways, right? I mean, again, logically, it does make sense. Logically, and it does make sense, and it affects the bottom line here, right? And for people who still think that, GameStop is closing store and that's a sign of trouble, they don't know how to, or maybe they just want to mislead you, right? Of course, like these 12 years analyst people, like Brian Susie, right? He knew this, but he just want you to believe a certain way without, looking into the data, closely, right? What is the number that makes sense to you, right? So if this guy is paying $20,000 a month on just keeping the store open, now I know, like restaurants, probably the equipment and all that stuff. I don't know how much of that $20,000 that he mentioned include all of the equipments and like the upkeeps of things, right? So from what he's saying, it's just the rent. Like that's not even upkeeping the equipment that you have in the store. What if something break? And so that eats up into your bottom line as well. And so like what the registry at GameStop broke down or something like that, or the equipment go down. So therefore, closing store makes all the sense in the world, right? At least trimming down, the number of stores so that we could operate it in a better better, small, malleable, more, manageable at this moment in time, right? And I always believe that, hey, we're not going to be like this forever, right? Eventually, we're going to have the opportunity to expand. But when we do, we're going to profit hundreds of millions of dollars per quarter, right? That's what being in business all about, is to know what's going on in the economy and try to trim it or try to get ahead of the market before everybody else like stampeding, right? Now people are stampeding to cut costs. And this is why they don't know how to prepare for tomorrow economy, for 2 years in the future economy. And I think Ryan Cohen has done that perfectly. Or leadership, I'm not saying it's just Ryan Cohen here. Yes, he has the biggest stake in Gamestop, but it's his money. Okay, it's his share as well. So he's just courageous enough to make a stand, or make an example of what CEO should be doing for every single shareholder out there, right?
$20,000 a month. My utilities are $6,000 a month, and my labor is currently running about $60,000 a month.
Okay. So there you go. So labor costs as well, right? You've seen the my live stream there. I show you how many big companies out there continue to cut costs in labor, right? And unemployment's going to spike up, and eventually, those labor those people who are not going to have money leftovers to spend on anything, right? And so they're going to cut back naturally. When the economy is not doing well, why would you have all of those stores to try to catch what? Nobody's going to buy anything from those stores anyway. So to say that Ryan Cohen cutting down stores is a sign of trouble is you not understanding that leadership is trying to get ahead of everybody else, right? Due to this, look, labor costs, and then to avoid kind of raising the price of goods and services that they provide, too much so that it turns people off from going to your store in the first place, right? Because everybody loves deals. Everybody loves to have a discount on their goods and services, right? Nobody wants to pay more for anything. And so if you have leadership who is able to mitigate that a little bit, I'm not saying, they could do pricing power, but at least they have the ability to price things a little bit, just ever so slightly cheaper than the rest of the world, right? So if you could do that, customers going to flock in naturally, because they're like, oh, GameStop only sell it for this. Let's go there, right? Why do you think Walmart is so successful? Why do you think Costco is so successful, right? Because they do the right thing by customers. So I think Ryan Cohen is setting that up for the future as well.
That's at 28%. So I'm in for $86,000 a month before I sell a single sandwich. At a 32% food cost, I have about $11 profit in that sandwich. That means I have to sell 93,800 sandwiches a year, or 257 a day, just to break even and make no money. 1.5 million in revenue, and I don't make a dime. That's why your sandwich costs so much. That's a reflection on our economy.
See, and then used to be GameStop as well, right? You have, what did he say, 1.5, right? You could just imagine that if, add a few more zeros, right? GameStop made on revenue alone this year, if you will look at the trailing 12 here, 5.7, but you don't get to keep anything, right? In fact, we're losing $8 million, right? So again, this is why, like, it's not how much you can make, how much revenue can you increase to the point where people are like, oh my God, that revenue increase. This is why they only, these analysts out there, they only focus on the top line revenue, right? And it's a lazy way of analyzing the stock, in my opinion, right? Because there's so much more than just the top line revenue. What if you're able to cut costs to the point where you will become profitable with less top line revenue? What then, right? What we have been doing for the last 3 years. I mean, if you look at the amount of cash burn now, it's non-existent at this point. Yes, 2-3 years ago we were burning cash a lot, but we're not burning cash buying Lambos for executive here, right? We're burning cash to set up for the infrastructure, right? Rearrange something, right? Hopefully to I don't know, build a foundation that matters for the next decades to come, right? So again, those money is not burned to oblivion. Those money goes towards something that will build on top, that we could build on top of, right? And even if with the burning cash right here, we were able to kind of slowly making it back, because we were able to cut costs to the point where it makes sense now, right? So these operating expenses is going to hopefully trending down even more. But even if it stay flat from here, just the fact that the gentleman was talking about how food inflation going up, what do you think the price of all of the electronics is going to be? Two mo's, I don't know what that. Oh, thank you, appreciate you. Welcome to the chat. But anyway, so I was thinking, like, people needs to look into the balance sheet a lot closer than to just listen to this, Yahoo people. And we know all this, right? Hopefully that if you're coming here and you're new to this, look at the balance sheet for yourself. Don't let these people tell you otherwise, right? Because again, yes, they may be smarter than you, right? In that sense, but what good do you, what good is your education of the 12 years that you have? I'm referring to Brian Susie here, the, Yahoo chief executive, editor or whatever. What good does your education if you're just using it to mislead people, right? Into doing something that they not supposed to be doing, right? And again, like, I'm just a nobody here, right? Just trying to understand this company as much as I can because I believe in it. Of course, I'm biased, right? Because I already bought into it, right? And full disclosure, my average cost is higher right now, right? Because again, I'm okay accumulating at this price point, right? I'm okay spending 5 more years to accumulate, little at a time in order to lower my cost average. Now, hopefully, 10 years from now, GameStop is going to be significantly higher than this. And then 10 years worth of building slowly, consistently, going, even $100 million a year. Think about it. So just $100 million a year. People scoff at $100 million a year. It's like, now this is again, it's a lowball estimate for, for the profit, for GameStop here. I'm just giving it like $100 million a year. I think that's pretty doable for GameStop, right? And 10 years from now, if they were consistently doing $100 million a year, what is that? That's $1 billion. When is the last time you could make $1 billion in a year for anywhere? Yes, it's going to be a small company if that's the case, and we could do that too. We don't need to expand anymore, right? All we have to do is just make even $1 million a year. How about that? Of course, that's a ridiculous amount of money for GameStop. They probably just make that in 2 seconds, right? But what I'm trying to say is that $100 million would do wonder for this company, and I'm here for it, right? So, and then on top of that, you have the ability to get into other revenue, other form of revenue that it probably has higher profit margin as well, right? Like the digital aspect of things, the fact that we could be the middleman for the exchange of goods and services on the digital front, right? So yeah, and then also too, we have the ability to partner up with all of those, game distributor, right? Who are those people? I mean, Ubisoft, right? We've heard of that. Let me go to, hold on. I mean, I've shown you this before where, we have a digital store here. And again, like the narrative is still the same. Like these people don't have any updated, criticism on GameStop. Like they're just throwing stuff that hits the fan, right? They think, oh, this is gonna stick. Just tell them that GameStop doesn't do anything, right? Just tell them Brian Cohen is just a meme lord, It's like, what? I hope people are smarter than that. When you hear stuff like that, right? But again, they have so much reach that it's difficult to even talk about it without, making you sound like a crazy person when you talk about GameStop, right? And it's very effective, right? I mean, I've talked to you. I mean, I've tell a story before where I just at work, I would tell people about GameStop and all that stuff, and they would say, "Oh, I thought it's already done. Like it's not gonna happen anymore, right? Oh, it's a gaming. They sell used game and all that stuff without really doing the research themselves. What are they doing new, right? What is new to GameStop and all that stuff? And man, and again, like these type of people will come back, eventually if we're keeping, like if Ryan Cohen has been doing things consistently to bring more and more people in, eventually they're going to come in, right? Because we're treating customer with respect, right? When we tell them, hey, there's a deal coming, it's an actual deal, right? It's not like, hold on, let me, for example here. So I think most people don't realize this. Hold on. Now there's some items is like, well, look at this. They have their own brand too. So hold on. So let's take this one, for example, $7 here, right? Let's see if you could buy it elsewhere at $7. Okay, let's do this together. Welcome everybody. Hi Vinny. Happy New Year. Okay, so that's the game, right? Can you buy it and anywhere else for $7? Right? Look at this. It's like, who has the best pricing power here? So these things are pricing power. What I'm saying is that when they tell you that it's a discount, you're going to get a discount on it. Right? I'm not a Switch. I don't have a Nintendo Switch, but yeah, so you can't buy that particular game for that. Even Amazon right now is selling it for $48. eBay, which is, like this is a used, I'm sure this is a used copy, but $21, right? But on GameStop, look. And if you have a pro member, even more discount. Like, and this is the type of things that you would want to do. Oh, hold on. it's new too. Look, new condition. So we're doing well. We're doing well in terms of like trying to entice people the right way, right? We want them to feel like, hey, if we have a discount marked down or whatever, you be sure that that is the discount price and not some overinflated price, right? That's like, oh, it used to be, the original price is like $70, right? Right here. And then they just jacked it up to like 20% more original price over here, just to create the appearance that they are giving you the discount when they're not actually giving you a discount, and so that they could sell you at $70 a copy, and then they just put, oh, it used to be $100 a copy, right? That's BS, and they should get in trouble for it. But there's no ethical in making business anymore, right? And at least in that I've seen so far. But yes, there's so many discounts, and this is a digital download, right? Like if you could go there. My original thought here, and this is like, again, I'm preaching to the choir here. Hi everybody, just joining. This is for people who are still, I guess, saying that GameStop is nothing, right? And why would anybody support this company, right? And believe in the media here saying that this company is like done, over with, or whatever. Yes, there are some challenging still. I'm not saying that we're out of the woodwork here. Of course, the sales, we need to sell more stuff, right? But at the very least, we could operate at a lower cost, so that hopefully we're going to become profitable for the next decades, right? And I think it's achievable at this moment in time. While everybody is struggling, stampeding to cut costs, cutting, employee, we are setting up for perhaps hiring a few extra people, right? Because we have the ability to, if we wanted to. And hopefully those people are hardworking people. They're there to better the company in some way, right? So that's a good prospect to have, right? What's new about GameStop here? Digital store, right? They don't tell you that. They keep saying the same things, like, oh, look, the digital copy is not there, and when you see this, I'm sure there's more criticisms, like, oh, what's the point of digital download from GameStop? Well, here's the point. The point is convenience. Let's say you're here for, I don't know, let's say you're here for a computer monitor, okay? Or whatever, a small thing right here. Oh, you want to buy this memory card right there, right? You add it onto your card, and then it's like, oh, they have a digital download? I wanted to buy a game. So you just do this out of convenience. Like, you don't want to go, oh, let me, it's almost like not upselling, but I guess like laziness, right? Out of laziness. Like, oh, I don't want to go to Steam account in order to you want it in one bill, so to speak, right? And people will make those type of choice, and this is why it's so convenient for people to download it from GameStop, right? If you want this game right here and you want it in the same bill as that memory card, you want to add it there, right? And that's why it makes sense to digitally download from GameStop. And also too, you get a cross-platform, like UBF, Origin game or whatever. Let's say you have the Origin account, you have a Steam account, you could buy it in here. So this is Steam, right? And then you have an EA game, and then you have a Ubisoft game. See, It's like a multi-platform type of shopping center here. One-stop shop for digital game. There you go. So, and this is a valuable thing that GameStop is doing. I hope it works. It seems like it's been working, right? Yes, software sale was down, but everybody else is down as well, in retail space. And then on top of that, people doesn't have extra money to buy. Remember the buy now pay later, thing. They use buy now pay later to buy grocery. So that's a sign of trouble right there, because you don't want that. You don't want that economy to persist. Just like that, this gentleman is saying, like running a restaurant right here. $1.1 million in revenue, and he doesn't make any money on that at all. So that's why the food has been jacking up in price, and of course, labor cost is the one that is the first that these big company or big restaurant chain cuts, right? Or say that, hey, it's a labor thing. So, I don't know what the solution is. I think the solution is to get rid of these politicians. Where was the guy? This guy right here. Oh, this is, well, of course, he's probably like donating to the politicians. But my point is that these people, are there just to pat in their own pocket here. So again, I don't know, again, like the labor cost issue, inflation here. Inflation has nothing to do with increase in labor costs. That's just my opinion, right? Yes, that is a symptom of what happened in the, grand scheme of thing. If you're printing trillions of dollars and you still don't expect the inflation to happen, I don't know what kind of thing that you're smoking every day, right? Like, how do you expect people to believe that, oh, it's just labor here? And again, the solution is for people to understand what the Federal Reserve is doing to you. Like they're more important than, like, because they could change your life, right? They could make you do certain things. And if people are understanding, or at least learn to understand what the bond yield is and how it affects your day-to-day life, right? You probably could set yourself up for success in that, because it's all it is just protecting your asset. Whatever you have now, like the money that you have, yes, even if you're the best saver in the whole wide world, you still have to learn how to manage it yourself, right? Without, swaying either way. They would love to tell you it's the most difficult thing to do, but what it is just understanding the bond yield, right? And it's, I hate to say, oh, it's the simple thing, the simple thing to understand here. But just like anything, right? It's not rocket science here. It could be if you make it to be, but I think it's pretty straightforward. If you have 10 years worth of money, and then they only pay you 3% a year from that, wouldn't you make the choice to go here, right? But eventually this will go down in yield, and then what? So rich people has been chasing this right here, or the 2 years, right? For now, because the 2 years is paying 4%. Now, I think they're trying to get ahead of the fact that the 3 months, eventually the 3 months is going to revert back to 2%, 3%, right? Which is less than what the 10 years is is able to pay. When that happened, usually that's when the economy turned down because they're chasing that yield. I hope that makes sense, because again, why would they be in the stock market when it's so risky to the point where they're satisfied with a 3-year bond, right? With a 3%. When, if the stock market continue to go up and up and up, and they don't expect it to go down ever, why would they be satisfied with a 3% year over year? You have to think about that, and trillions of dollars too, right? And again, and that's why you like learn to understand why the bond yield so far. If you look at the 10-year, hold on, it's been kind of dropping down. How do I make the chart here? But anyway, take my word for it, or do your own research here. That number right here used to be 4% something just a couple months ago. Now they're chasing it, right? Meaning that they're preparing for something big. A drop, I don't know. Again, like I'm saying, it's not going to be happening overnight here, but they're trying to get ahead of the market. And that's why they call themselves smart money, right? They call us dumb money because we don't know what these people have been doing. They're just slowly trimming off their profit, and this is why they tell all these Yahoo Finance people to tell you, oh, the economy is going bad, doing better, rate cut is better for the economy, Fed's gonna cut the rate, that means good thing for the economy. That's not true. Let's see, if you look at the market sentiment and how these people are covering Sam Bankman-Fried thing, I hate this. I don't know why I keep like clicking on their page, but I use their network a lot because I just feel like they're pretty, I don't know, seems like bought to me, like they're just a mouthpiece for the rich and powerful to get it richer, and I think these are notorious for private equity too. Hey Marins, what's up? Aw, thank you. Dropping a like, working on connected thought. Just keep them coming, Marins. Appreciate you being here. Yeah, I mean, CNBC is notorious for, bringing the private equity angle. And of course, like I saw since Moran's here in honors of his Connect the Dots series, I think private equity, I think they were boasting about how they have $1 trillion private equity fund and all that stuff. Hold on, let me see. Private equity. I think $1 trillion sit on the sideline, but that was like a couple months ago that I saw that one. Right here. Oh, I keep I hate their website. I'm sorry. Maybe that's my bias too, because I'm like, immediate hatred whenever I click on there. So I need to tame that biasy, because you don't want to be too biased here. They might have some good information for you to learn about something. So okay, so this segment here was 4 months ago that I saw, and this is Blackstone, right? I'm sure Marantz knows a lot more about that one, and I can't wait to see that Connect the Dots series. About real estate and the economy. $1 trillion. Okay? They just reached $1 trillion. And these people are notorious for being on the side of private equity. And this is why it makes so much sense, right? That they hate Ryan Cohen so much, because Ryan Cohen was successfully pushing those people out of the way. Of a struggling retail gaming industry, right? And the fact that, the industry was struggling already, but there's a difference between dying of old age, right? And somebody said this before, that's why I use it now. It's not my quote here. So, when you think about the private equity angle here, right? And that why GameStop was such a target, right? And, this is old leadership, okay? This is 4 years ago before Ryan Cohen come in. They were there on purpose, right? We know that. And what do? When they have those people set up in place, they have been, pummeling it down, right? Even though like the company is doing well, actually the business operation was doing, kind of like okay. It wasn't like, trillions of dollars of profit here. I'm not saying that, but it's like $300 million a year, right? Or $100 million a year, $200 million a year. Don't quote me. Don't believe me. Just go to the finance of GameStop, okay? And then look at it for yourself. So look, free cash flow, okay? They've been kind of positive for quite some time, right? But still the net income was still needs to be massaged, right? But again, this is annual. If you do the trailing 12, it brings you it gives you a better picture of the, running 12 months of earnings here, right? Again, like it's more comprehensive. That's why I like to use it. And I learned that from Rance here. But yeah, come on. This type of swing, it's not like something to be like, oh my God, that's nothing, right? $500 million swing, that's nothing. But anyway, let me go back to the private equity thing. So when they are there, it's the equivalent of like waiting for something to die of old age or killing somebody by murdering them, right? So the private equity people, they were trying to murder GameStop, right? Because yes, it was old and it was like it has some problem in the way that it was operating because they're not doing anything modern, right? And at the same time, they're just like, yes, surviving in terms of making money, cash flow positive and all that stuff. If you leave them, it might have died in 10 years, right? It might have had some life left, right? But these people want them to go under immediately so that they could carve up the asset as quickly as possible. Rather than waiting 10 years to do that, they want it now so that they could kind of rinse and repeat it back later on, right? So that's how they are able to create this massive amount of money, trillions of dollars, in a short period of time because they know the game well. It's much quicker to demolish a building. Just think about the building that is being demolished in a second, right? Just put some bombs here and there, right? And demolish I don't know, 15 minutes, right? You have to install the bombs and whatever, or ammunition. I shouldn't say the bomb. Strategically or whatever, but you could only do that for 10 minutes, right? But how long does it take to build that building up, right? A lot more, a lot longer. And this is why they're able to do it this way. And then on top of that, you have the media on your side. Not on your side, they bought them, right? That's why they're like, their angle is like, oh, GameStop is the worst, Ryan Cohen is the worst, right? All that stuff. But let me play this one so that you could hear it together.
It was a long journey. When we started in 1985, there weren't diversified private equity firms. Basically, there were just about 7 or 8 firms that just did leverage buyouts. And when we started, I was worried that if you just did one thing, because there are no patents in finance, we had a strategy of wanting to go into other areas as long as it was really exciting for the investors, people we could raise money from,
So constant innovation, basically changing.
We started to have an innovation machine, and I thought it was just necessary, and we were the only people who wanted to do that. And so we got really lucky. We were good at figuring out what was next. You could sort of see it. We went into real estate in 1991, 92 at the bottom of a real estate collapse, and now we've become the largest real estate investor in the world. And we went into hedge funds in the late 80s, and that proved to be a really good thing in the debt business in 1998, before almost everybody else was doing that. And we've just...
So note that he's saying debt business, right? So real estate, I think this is where, AMC come into play, right? Why they have these CEO signing a lease that is unbreakable because of this stuff. I don't know how people can connect the dot here, and thanks to Marantz that he has this type of the work that he's done every single day. I don't know how people could do that. I mean, it'll only take people who are diligent enough to kind of dig through what's going on. I'm kind of obsessive with my information as well, but not to the point of level of Marantz here, because it seems it's so much, right? When you think about how the connection, and then to have people say that these are conspiracy theories and all that stuff, it makes no sense to me either, right? And there's a reason why they use that term too, because to oust people or to deter people from even looking into the information themselves, right? I would think that people needs to kind of take a step back and not really, think about that. But again, the fact that he was saying, it's in the debt business, right? And just connecting the private equity angle here. I think Blackstone is private equity, right? And $1 trillion, it makes sense why they make so much money, because of those, massive amount of loan on, or at least the leases that those commercial real estate, I bet, have to charge, businesses, and then kind of bury them that way. And then if you plan as an executive that will sign on to those deals, right? Because any executive who knows how to do business wouldn't sign that deal, right? I don't think Ryan Cohen would sign that deal, right? It's that he would much rather just close down the store. It makes no sense to sign a deal that you can't break the lease from. It makes sense for them because, again, they're a plant to do that.
Just had one thing after another, and each one I look at as an individual opportunity. No grand strategy of exactly where we go, but our job was to create new products and great returns with very minimum risk.
Steve, you mentioned that you are the largest owner of real estate, and there are people who look at that and say, oh no, commercial real estate in particular is a real problem spot, and that's been the area that, even though a lot of issues in the financial markets have worked out, people look to that to say that's going to be the next big problem. What do you say when people say, what do you do with this? Are you in trouble?
Well, the answer is it's a great area, but not all parts of it are great. So the part that reflects what you were just asking about is in the office area. And today, 20% nationally of offices are empty because people haven't come back to work. And at that level, office buildings are no longer really viable from an equity perspective. Now, the new ones really are. People want to be in those, but if it's 10 or 15 years old, then you have that problem. We had tons of office buildings at the financial crisis, 70% of what we owned. Today in the United States, we only own 2% of that problem area. The rest of what we own is where real estate is really terrific. Warehouses, for example, are about 40% of what we own. They're going up 12 to 14% a year in rents.
So see, warehouses, and they charge so much for those rents, and this is why they do so well. And he's explaining Okay, so office building, because of the pandemic, nobody's really want to do office building. But I bet you anything, when the collapse happened, these people are gonna scoop it up and turn it into what? Apartments. And I think I saw an article about that. It's like, again, like this is why they're sitting pretty, patient, right? And then they look into the commercial real estate on the, I'm sure, warehouses, he was saying, and then of course, like I'm sure retail spaces as well, right? And this is why, they are setting up to, I guess, lend their money out, or signing leases or offering leases to people like Adam Aaron, right? And I'm sure it's like they're working together here to screw over the public, right? And of course, the more people invest in AMC and all that stuff, the more people will fall for that. And then eventually they're not going to get anything from their shares because, again, shareholder equity is not there. When you file for bankruptcy, just like that Bath & Beyond, you're not going to get anything from your shares. So you're going to be left with nothing, right? And so these people are setting up too. And let's say AMC can't be there anymore, right? And these people are still collecting the rent from the businesses. So remember this gentleman here was saying how he was paying $20,000 a month for the rent on his restaurant? It's like, that's insane. This is why your food prices went up like crazy, because of people like this. They have the monopoly over the real estate, commercial real estate.
Hard to imagine that that's a problem, because it is.
And mind you too, they have the ability to write off, like a depreciation thing too. So that's kind of deduct their costs. That's why they're doing well.
There are other areas in real estate like data centers, which are literally exploding with growth. Rents are going really high. So what we find in real estate, there are good neighborhoods, in effect, and some really not good ones. And our portfolio is hugely biased to the good areas.
When did you see the problems with commercial real estate with the office buildings and say, we got to get out of this?
It started in the late teens, and we were finding that the cash flows coming off of those buildings weren't what they used to be.
Oh, I bet you anything there's some insider information there. It's like, how can you just time it so right? I'm sure, the Fed is probably, telling him he gets some information about the coronavirus too, right? I hate to go to that point because, like, again, leaning towards the conspiracy theorist type of theory here. But I hate to say, like, oh, these people time it so well. They know something. They always know something. And the fact that Jerome Powell, the chairman of the Fed, usually consult with these people first before he do any interest rate and all that stuff. And this is why it makes no sense. The decision that he made, back then, to keep the interest rate at zero, right? Why? You see the inflation, and then he tells you, oh, inflation is transitory. Makes no sense, right? Because if you print $6 trillion into the economy and you don't expect any like negative ramification for that, like, man. And it's been 4 years now. The national debt is like
capital expenditures,
$30
things, and we decided that we should really lighten up, and we did. We made a huge switch. We switched out of shopping centers around 2015. And so part of the art of really being terrific in the real estate business is knowing which sub-asset classes to be in. So resort hotels, which we also have a bunch of, I don't know what they call it. Is it revenge spending?
Yes.
After the pandemic, we made a profit. I think it was over 10 times our money in Las Vegas with a wonderful hotel. And so if you're consistently in the right place at the right time, real estate, which is the second biggest asset class in the world, is a really wonderful place to be.
I remember, what was it, a year and a half ago, I think, you started talking to your businesses about the potential for a downturn and making sure that all of your companies were really kind of getting their things in order and making sure that they were ready to go if the cycle turned down, if interest rates went higher. What are you telling those companies right now? What do you see?
Well, we were right on all that. We had the banking crisis over the last few months.
So you see how these people are boasting the fact that this guy get ahead of the game, right? By cutting costs when it needs to, which GameStop has been doing for 3 years. What? How is this guy is doing the right thing at the right time before anybody who thinks that there's anything going on? But when GameStop has been doing that, what? Oh, they're cutting store? It's like, their revenue is going down because they've been cutting store. That's a terrible thing to do. It's like, really? And I hope people see the biasy in that. And I hope people see how these people cover a certain company, a certain CEO, boasting a certain CEO, right? And diminishing another, just because, hey, we all know why they boast this person. The CEO of Blackstone, right? Versus trashing Ryan Cohen. We know that, right? It's human nature. These networks takes money from somewhere. And you probably could guess.
Down if interest rates went higher. What are you telling those companies right now? What do you see?
So I'm just gonna...
Instead of really going into recession, U.S. growth was 2.4%. In the last quarter. It shocked almost everyone. And so the U.S. economy is more resilient. But what's really fascinating is how much inflation has gone down. And if you remember, my partner John Gray goes on your show periodically, and we've been talking early that inflation was way more than the government was reporting. I think that was true. And then we started talking about the fact that inflation was going down much more than the government thought. And we're seeing it in our companies. And I guess there was just a report of 3% inflation. That in no way surprised us. And so it looks like the Fed is actually doing a pretty remarkable job, contrary to what people might have thought. And if the inflation continues to go down, that we have full employment, then we may be able to skirt a recession. That was a long...
I don't know about skirting recession here, right? Of course, every metric out there might be able to achieve soft landing, but no, I don't think so. Because remember I show you? So you see this rate here, right? It used to be 4, 10 years. Now it's 3, right? So why would the yield go down this quick? It's because people are chasing it. And think about the treasury market. It's actually more than the equity stock market, right? I think it's $16 trillion or something, or maybe higher. So it takes trillions of dollars in order to move the bond market, that way. So what does that tell you? It tells you that big monies out there are chasing that yield. So that's not a good thing for the economy in terms of the stock market. But but it's downturn. And mind you, this is 4 months ago. Right now it's down how many percent? I think 3.8 today. If you minus that to I'm looking at the 10-year yield here. So that's a lot. Mind you, 1 basis point or whatever, the 0.1 is 1 basis point. That's 3 basis point. That's a lot. That's a lot of money, right? When you kind of that percentage and trillions of dollars, if you were to time it, it's a lot. Hundreds of billions of dollars just being spent here. And there's a reason why they are chasing it, just like I explained to you. If they think that the stock market will go higher, within 10 years, okay, they're locking their money 10 years. Within the next 10 years, why would they be so happy to have a 3% higher year over year, right? And there were people who were lucky enough to lock in the 4% rate right here, right? And again, I think the bond yields is going to continue to come down, not because of the Fed. The Fed is not in control. The bond market is. So that's why they've been pivoting or saying that, oh, we're planning to cut rate. Well, because they are seeing this right here. I mean, the only thing that they could do is to try to entice people to lock into the short-term treasury bond right here. But even then, how long can they pay the 5%? Not very long. Eventually you're gonna run out of money, asset, printing press, and all that stuff. I mean, how many more $1 trillion do you want to double your debt until that happen? Of course not. Eventually they're gonna wind down, and that's what happened when the stock market, like 2008 and all that stuff. Of course, they have different problem then, but the similarity is there. So yeah, I heard somebody said one time that to watch the 2-year. Oh, I think it's George Gammon, the rebel capitalist person. He said to watch out for the 2 years versus the 10 years. If they're inverted back, meaning the 10 years is higher than the 2 years. So if the 2 years turn down to be 3% or 3.7 or whatever, that's usually a sign of economic downturn, meaning the stock market will crash. Again, I don't think it's going to crash in one night, but it could happen. Remember the Black Tuesday or whatever that happens in 1929, or Black Monday. Am I saying it wrong? Black Monday or Black Tuesday? One of those years, one of those days. Anyways, let me finish up what he's saying here. I think I finished it already. But yeah, so private equity is everywhere, and this network is notorious for boasting people like this, right? And this is them. I'm sure all of these anchors, they put money in there, and of course they want to promote their own money, and of course they get paid to say good things about these type of company, right? And that's why it makes sense that they hate GameStop so much, right? Because GameStop is the opposite side of that, right? They don't like to see, and maybe they haven't been closing their position. I mean, it's possible that they still didn't close. And if you look at these people has been bought already. All right.
Shares of the video game.
Hold on one second. This is how long ago? Okay. They have been shorting GameStop for over 10 years. This is a video from April. Okay. April 2013.
Retailer this morning climbed above $30, the high since April of 2009. This is after analysts predicted a bump in sales once Microsoft and Sony roll out their new Xbox and PlayStation. Since its low last July, shares of GameStop have rallied 88%. Now, a big chunk of investors are pretty bearish on GameStop. We found that it's the most shorted stock in the S&P 500 right now. Bets against GameStop are equal to more than a third of its float. 35% right now. That's shares available for trading, perhaps on the outlook that gaming will move away from physical sales towards virtual sales. JCPenney and First Solar are the next most shorted companies. 29% of their float right now is on loan to short sellers. The average for the S&P 500 as a whole, by the way, less than 3%. Unlike GameStop, both Penny and First Solar have actually rewarded the skeptics because JCPenney is down 24% this year. First Solar, meantime, has lost 13%. GameStop, on the other hand, is up 19% in 2013, making it expensive for short sellers to hold on as their trade goes against them. It's been a painful ride for investors.
Wow. So that was a old video. I think 10 years ago, over 10 years ago. 29 if you were to divide it by 4, what is it today price? 29. Why do I divide it by 4? Because we did a stock split, remember? So they've been shorting it since $7. Okay, that was $7 back then. $7. Okay. Goodness, no wonder these, and that was Bloomberg, by the way. So $7. Where is $7? Where was the 2013 right here, 2013, boom. And $7. What is that? $7.45 right here. So maybe this was the squeeze a little bit, right, from that $13 shorts, and then they short it right back down, right? So 10 years ago. So this is why it's makes sense that these people are trying to beat this stock down so much, right? They call it poop and scoop or whatever, pooping on this stock so much. I don't know who was at the CEO. Is it still the Gammon guy? Not Gammon, sorry. I'm making the wrong right here. So around here. They've been shorting since then, right? And this one, this price point, let's mark it. Boom. $7.45 shorts. And then they have 30% short. Right there. Woo! Okay. So right now, I'm sure they probably create more short position here too. Look, they've been pummeling down until Roaring Kitty. And you know, this is why it's so important level right here. People were probably panicking and selling a little bit there. But again, the volume back then was higher. It was a lot higher, probably in the 10 million shares traded back and forth, right? A lot higher than today's volume. And I'm sure, you know, there are some people panicking, selling, and the short probably makes a lot of money, you know, from that. But we were, I think at this time here, we were smarter. Just buying and hold, right? And then this is retail. This is all retail. This is not them short covering, right? How do I know this? It's because of the financial report, remember? The committee, financial committee reporting on Gamestop. And it stated in there that there was not short covering. This is all retail buying in. Massive amount of you know, leverage. Obviously, Robinhood was popular back then. People were able to do it's a margin account, right? So let's say if you have $100, you could use $200 to trade. It's courtesy of Robinhood, right? And that's what happened too. And there you go. That's the history of this company. And I'm sure there's tons of like evidence coming here. Of course, Jim Cramer. Look, what do you think of GameStop? Okay, let's listen to this guy.
Question on GameStop. It's down quite a bit. Buy more or let it go?
You know, it's big short position. And I think that Paul Raines has done a remarkable job. And there was just one piece of research which just said that there's a big slowdown right now in games. I want to buy GameStop here. Now, I understand, again, people have to understand, like people on Twitter, look, there are many forces that move stocks. and some of them just want to move stocks lower. And GameStop was moved lower, I think, in part by shorts that wanted it lower. And understand they can do that. And I think GameStop's doing a very good job, but it's a retailer, and no one wants to own retailers.
Question on GameStop.
Nobody wants to own retailer. So when was that? 2015. Oh wait, did I mark this the wrong one? Yeah, sorry you guys. It's New Year's. It's the old me. So hopefully tomorrow will be the new me. Okay, sorry. So this one. Okay, so 13, right? And then that segment was 15. 2015. Somewhere here. So of course they want to, he said he would buy it now, right? But it's a big short for them. That's what he's saying. What is this one? My time is done. Today is my last shift for GameStop season. Hold on 1 second. What's this? Yeah, I mean, people know what's going on about this company, right? Oh man, I love Twitter sometimes. Like I could be on here for hours. Kai Schmales, come on, I don't like that guy. And of course, this guy has a good video too. Okay, what is he saying here? Oh, this is about the DCCC. It's okay. Alright, you guys, I think that's all I have for this one. Woohoo! Oh no! Hi Ken. I'm sorry. I've been here for a long time and I was about to end the stream in a moment, but thank you for joining. Hello? How are you doing? Merry Happy New Year. Merry Happy New Year. Alright, what is this?
More record.
Hold on.
What more do you want from me?
More.
How much more successful do you want me to be?
More successful.
How many records can my records break?
More records.
But I'm the best.
But are you a different animal and the same beast?
What the f does that mean, Carl?
You're welcome.
What the f is he talking about? What more do you want from me?
That's
More.
funny.
How much more?
Oh man. Okay, this one. Let's listen in. Just in case nobody watch my other live stream. This is like so much important that people need to like. He thinks that he could set up the price of the security here. And he thinks he's smart. He has a team of smart people who could analyze certain things. That's called fixing pricing, price fixing, right? That is illegal. And he's just going out there and saying, we could set a security price. Here, listen to him.
Trying to is actually rooted in the theory that markets are efficient. And that markets are efficient because of active managers setting the prices of securities. Firms like Citadel. That markets are efficient because of active managers setting the prices of securities. Firms like Citadel. Firms like Fidelity. Firms like Viking Global. Capital Research. We're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued. Trying to drive the value of companies towards where we think they should be valued.
Okay, so if you value GameStop at $6, why can't I buy GameStop at $6 right now? Where can retail go and buy GameStop at $6? Can I do that? Of course not. I need money to buy that, okay? But anyway, that was just like bonker, right? The fact that regulator doesn't do anything to, like, where is the SEC? Like, what? Sorry, I'm kind of aggressive today. What's going on? Man. All right, you guys. I think that's all I have for today. I'm kind of like hungry right now. So appreciate all of you joining. Thank you, Marantz, for stopping by. Thank you, Jay. Thank you to Mose. I don't know what that is. But yes, appreciate you. Vinny, thank you. Thank you, Lionel. Thank you, Lynn. Appreciate you. And Ken coming in just now. I'm sorry. I have nothing left right now. I'm just babbling on for too long today. But yeah, Happy New Year's. Hopefully you enjoy your family and enjoy your time off. And hopefully, hey, continue to be beautiful. Continue to be all of that. And more. Okay. And then of course, like, think about Ryan Cohen. Think about GameStop. Think about how great this company is. And the fact that, everybody is betting against it. That's actually a value added, not a negative at all, because that's going to create the negative sentiment as long as possible in order for us as a retail investor to accumulate at a lower price, right? Count it as a blessing. You see, GameStop at $17 right now. Not saying that it won't ever come down, because anything could happen. If, again, I'm gonna end on this one here, because if the S&P 500 drop like crazy because people are panicking, GameStop's gonna come crashing down as well. Even though the fundamental of the company is doing well, it really doesn't matter, because again, panic, right? People are panicking. The same way happens with Bitcoin, right? Bitcoin come crashing down from $9,000 to $3,000 in a week, right? Next, a few months later, it bounced back, right? Because people are mispriced it, because there were too many people who is willing to sell Bitcoin at, whatever, $3,000, because they saw their portfolio went red, not knowing the fundamental of what Bitcoin is, as a network, as a whatever, right? Again, like I'm a crypto person, but let's look at it real quick. Currently, it's kind of pulled back a little bit. My belief is that it's going to be a pullback, and the all-time high is not going to reach this year or next year. I think it's going to be more like 2 years from now. I think I have here. Ooh. So the price target that I think is going to drop. Now it might kind of run into this so that they could drop it on you like that. And then my thought process is that this is when Bitcoin is going to go all-time high, or at least go back to $70,000. But it's not going to be until 2026. I think it's going to be low next year, coming down, kind of accumulating in. I'm sure institution is going to dump on top here, right here, and then you kind of crater it or consolidate it so that people are, kind of shake out the retail. People are not long-term. Doesn't have any long-term outlook on the network itself. And then they're going to try to accumulate here. And then this is when the Bitcoin ETF storyline coming up again to pump it up. Because again, institutions love to do this to retail. And they will accumulate here while they're going to send all these media heads out there. Oops, not that one. Send all these people, saying, oh, are you interested in Bitcoin? It's like, no, I don't want to. Remember, like the Larry Fink's guy, the BlackRock guy? Not Blackstone, BlackRock, that's another guy. It's like notoriously say, oh, Bitcoin is not in our purview or whatever. Our client doesn't like Bitcoin, like years ago, right? When Bitcoin was like low. Oops. Anyway, even with me trying to end the show, I'm stumbling here. Yeah, he was like notorious in saying how Bitcoin was not a buy, and then recently he's been advocating for Bitcoin, right? Or at least the blockchain. See.
BlackRock had an investment in FTX.
$24 million in a fund of funds.
$24 million.
Yeah, it was in a it was not in the core part of our business.
Okay, so what do you think happened there? And then I
actually believe this technology is going to be very important. I believe the next generation for markets, the next generation for securities will be tokenization of securities.
But Larry Fink states that BlackRock is still in crypto for the tech despite the FTX scandal. And it reminds me of the famous meme, Bitcoiners be like, I'm in it for the technology.
See, I mean, come on. Now, of course, like years after that, before that, he was saying, "Oh, no, we're not interested in Bitcoin." It's like whatever, right? Again, this institution knows the value of technology, value of the blockchain network itself, and I think Ryan Cohen is setting up for that as well. As we all know, we've partnered up with. Loopring, Immutable X, and all that stuff. Again, those are like hopefully 10 years, right? Growth aspect of things, and those are high margin items as well. A platform that is building to last decades on end. So you're in a good company. That's what I'm trying to say. Anyway, so let me go eat something. I might do more video later, a pre-recorded one. Yeah. Happy New Year.